Following Trump's win, there's been a big shift in the market that a lot of folks may have missed. Welcome to Trading Nation. I'm Eric Chemi, joined by Matt Maley of Miller Tabak and Nick Colas of Covergex. Nick, you've got a note out talking about these sector correlations with the market. It's a little bit maybe advanced math here. So walk us through a little bit what's going on.
Yeah, the very most basic message here is for the entire time from the financial crisis through the election last year, assets in the U.S. market, things like tech stocks and financial stocks, all traded largely the same way. Correlations were very high. And we saw this in the old risk on, risk off trade where everything was either up one day or down the next day, but nothing really ever broke apart very much over the short term. Since the election, entirely different. Now sectors are moving a lot more on their own, a lot more based on their own fundamentals. And it's really the first time since 2009 we've seen it. So it's a big change.
So, Matt, I want to turn to you. We used to see the correlations always so high, right? That was the thing for a while where you couldn't be a stock picker. Everything moved together. And now you look at Nick's note and it's like, you know what? Correlation is actually pretty low. So maybe it's time to be a stock picker again and not just be a trend chaser. What do you think about that?
Oh, definitely. I definitely agree with that. We're basically going from a situation, in the years following the credit crisis, central bank liquidity played such an important role in what was going on in the stock market. Every time they kind of pulled back, a QE program would end, the market would come down, and then they'd go back in, the market would go back up. But the tide, they say the tide raises all boats. Well, in history, they didn't really. They raised most boats. But in the last few years, as Nick points out, they've raised basically all the boats, even the ones that shouldn't have been raised. So as we move now into a situation where we're going to rely more on economic growth to drive these markets, these correlations are starting to fall down quite a bit, and you're going to need to take advantage of not just people who can short the bad ones, but also even the long-only guys, the guys who can avoid the bad ones. So, I mean, people always think that, geez, it's you got to have the hot guy with the hot stocks. Well, the really good long-term investor is also somebody who avoids the bad ones, and there's more of them out there than there have been in the past.
Nick, do you agree with that? Do you think this is a good thing for the market to actually have low correlations among stocks, among sectors, so that, like Matt said, you don't get a rising tide lifting all these stocks that maybe should not get a lift?
Yeah, it has two effects primarily, and one is kind of good, one is a little bit more difficult. The good one you're pointing out is the right one. You've got to pick the right sectors. That's good or bad. If you pick a wrong one for a while, you're going to end up behind the curve very quickly. So what if you were long financials going into this year? They had a great Q4, and they have not had a very good Q1. So now you're behind the curve. You've got to catch up in the back half of the quarter. That's a good news, bad news situation. What's good for investors everywhere is volatility declines. When correlations drop, overall S&P volatility declines. It's just the math of diversification. So we're seeing very low VIX for a reason, and part of that reason is this breakdown in correlations.
Well, I always like segments that have the math of correlations and diversifications. Nick, really interesting note. We're going to have to watch this trend, obviously have you come back on when it changes again, because it's not going to stay there. Those correlations like to move up and down a little bit. So thanks for joining us. And of course, Matt, thanks for being here as well. And for all of you watching, this is Trading Nation. Thanks for watching. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.